Hello, folks. Good evening. Welcome to this video on Techie Investor. This is Srini here. And in this video, I wanted to answer a question that most of my subscribers have been asking, how to invest long-term technically, okay? This is the question I get very often from people who are not very interested in day trading, but they want to still use technicals to leverage their long-term investments. Okay, so today I wanted to share with you my system and the setups that I use for my long-term investing. Before I get started, I wanted to explain what is a system and what is a setup, right? System is nothing but a set of rules that I set for myself how I trade. That includes my entry points, exit points, and my risk management and position management. Okay. Then what is my setup? Setup is the trades that I take up. That means a particular scenario happens on the charts that tells me that I would enter the trade. Okay, that is my setup. So just you got to understand the system and the setups. So I've been using this process for a very, very long time. In fact, pre-COVID, when we saw this during the COVID, everybody was saying, "Hey, the market is tanking and all those things." But my system told me that my setups and my system told me that the market is going up, and we entered, and there was a huge money to be made. We made a lot of money during the COVID, right? We all know that the market went up like crazy in 2019 up to 2020. And I would be sharing you the charts later, how the market went up, okay? Especially SPY, QQQs, and all those things. So so this is the agenda for this meeting, okay? First is, I'll tell you, before I get started, I wanted to tell you this system and process will work you to achieve your financial trading goals or investing goals, but you will never know which trade will get you the results, okay? So you need to be comfortable with that uncertainty and embrace the process and then have fun with it. In that way, what happens is you know that you are comfortable, you know that you will reach your goals, but you just don't know how. Okay, that is always the agenda in the trading, okay, or investing wise. You never know which one will take you to your goals, but you know that you will reach it. You got to embrace that mindset. That is just one thing I request you when you're going through this video. And of course, we'll show you a lot of examples to say that this happened. But as I mentioned, the past information doesn't guarantee that the future will work. But however, we can take a calculated risk based on the past results. Okay, that's always how we work, right? Okay, so let's talk about it. So first of all, the setups. For those of you who know me, I always am a big champion of Ichimoku Cloud and the EMA 821. And I'm also a follower of trend. I'm a trend trader. That means I would like to go with the trend. Okay. Today, I'm going to share with you how I identify a trend. Now, since we are talking about long-term investing, I want to talk about, I would consider only the weekly charts. The reason being is you don't want to get caught up in the up and down movements of the daily or the hourly or even the 10-minute charts, which are used mostly by the day traders. You need to check your positions once in a week to see if they have broken the setups for which you entered. So usually when we do these kind of things, we call it as technical entry and technical exit. What is a technical entry? A technical entry is something that we enter when it is like technically giving you the setup. In my case, if it is above the EMA 821 and if it is above the Ichimoku Cloud, and if my risk reward is very good, then I would enter the trade. Okay. Now, that is my technical entry. Now, what is my technical exit? The same reason why I entered if it is broken. What do I mean by that? I entered a trade because my EMA 821 was my price was above the EMA 821 and my price was above the Ichimoku Cloud. If my price goes below these two indicators, then I am out of it. with a confirmation, right? That means if the price goes below that with confirmation, usually when I say confirmation, that means it's 2 units. Since we are talking about weekly charts here, if 2 weeks I see the price below the EMA 821 and my Ichimoku cloud, then I exit the trade. There is no emotional process in it. If it breaks back again, then I would again enter the trade if I see the confirmation 2 weeks above EMA 821 and Ichimoku cloud. So hope I am clear with what is my system and my setup. So once again, I repeat, a setup for me, the setup is if the price is above the EMA 821 and Ichimoku cloud, and I want it to be as close so that my risk reward is very good, right? That's my setup. What is my system? My system is first of all, my position management rule. If you're trading with 100K, I would never recommend starting with more than 5% of your portfolio if you're doing long-term investing. So definitely, again, if your risk appetite is more, then do that. So the reason why I say 5% is it is that you will get an opportunity to trade around 20 stocks if you have a 100K portfolio. If you have a smaller one, then also you would be able to do 20 stocks, right? So that is usually a 15 to 25 stocks is the basket. That is a good one. Even that might be high. For people who want to play with only 10, then you can go with 10%. It all depends upon how many stocks you want to have in your basket at a particular given time. And also understand how the diversification, how you want to diversify. Now, some people ask me, what are the stocks that I need to pick up? Usually I say it doesn't matter what stock you pick up as long as they are in a trend. But having said that, I would also say if you are also mix a little bit of fundamentals into it. For example, you want to see that the stock is fundamentally solid. For example, the revenues are good. And another simple way, which you don't even want to do even fundamental analysis, is to trade stocks that you use in your daily life. For example, I use stocks like Microsoft products all the time in my daily life. I use Apple because I have my iPhone with me. And then I use Google for all my searches, those kind of things. So these are some of the stocks you can always trade. And of course, the indices, SPY, AQs, and IWMs. These are the indices that cover the whole sector. And if you own a Tesla car, definitely you can trade in Tesla stock because there's a reason why you bought those things because you would have done genuine research and the stocks are tending to be good. And why not invest in what you are already spent on, right? That is the thought process behind it. Okay, without any further delay, now let's look at the chart and see some of the examples how the system that we talked about works. One of the stocks that have been recently trending is Palantir. They have been very good and everybody is raving about their AI platform. And even some of the top analysts are saying that it has a potential to go to 500, which I do not know. My goal is not to tell where it's going, rave. I want to be along with the wave and catch the trend. That's all I'm looking for. So for example, I have been in Palantir for quite a while, but I have not caught the lows, but I wanted to tell you where it started trending, right? If you look at it, I have also drawn this Bollinger Band just to know how it is trending, but this is not what I use as a system or a setup. So as I mentioned, I use the EMA 821 cloud and the Ichimoku thing. So if you look at here, this stock was pretty new on the weekly. I don't see Ichimoku also until here, which is on November 13, 2023. Until then, the Ichimoku clouds were not formed on the weekly charts, right? That's what it looks like. Now, if you see here, let's say you see here, and here it went below the EMA 821 and it started going up. But what I'm seeing is if I had entered, let's say I entered here, that means because I see 2-week confirmation above my EMA 821 and the price was around closing was 1661. If I had entered this, my risk would have been around $6.96. So therefore, my risk was around $10. So you have to consider that risk, okay? So your risk is $10. That means you need to manage your positions accordingly to your risk. Let's say if your risk is $10, that means if the price is going to $7, how much would you end up losing? Those are the kind of things that you need to answer for yourself, okay? Which we'll cover in a detail in another video, how to do the risk management with example. But for right now, understand that if you're buying like 1,000 stocks, which is at like $16, you would have spent $16,000. And if it goes back here, that means if it goes to $7, that means you would have lost $9 and you would have lost $9,000. Is that worth the risk? Is the question that you need to ask. It depends upon your portfolio and all those kind of things. But anyway, those are the kind of questions you want to ask yourself. So maybe I would not have considered here because my risk is very high. But if you look at here again, you see here, it is like around here at this point, it has entered where? At this point, at the second wave, it was like around 25.52. And my risk, again here, there's a $12 risk. So you need to understand this, right? The risk is always there. Now, okay, let's say you entered here at 1661 and you know your risk is $6. So you didn't buy a full position, but you bought, let's say, 500 stocks. That means you bought it only for 8 stocks. So if it goes down, you would have lost $4,000, right? Something like that. So let's say $4,000 is okay for your portfolio. Let's say that. Now you went in here, you wanted to say 1661 and you bought it at 1972. You bought it here, then you kept riding this wave. Now, what is our exit setup? Exit setup is it should go below your Ichimoku cloud and as well as your EMA 821. So here it never broke, folks. So let's say you bought it here at 1972. You're still riding on this and it is at 40 things. So let's say you bought 500 stocks at at $20, let's say for the round one. So that means you would have put $10,000 and today it is at $40. So how much you would have made? So that is $20 more. So that means you made already double of what you made. That means it's $8,000 solidly rocking with the 40 into 500, it's around $20,000. So you had already made double your investment. So those are the kind of things which happens with the trend trading. Now, where am I setting my stops? Only if it goes below 1746. That means I still want to ride the trend. So here you might have a question, hey, I want to remove it. It's up to you, folks. Now that comes with the tier management. If you say you have doubled it, you can take away half of your portfolio, half of your stock, so that you'd never lose on this position again. And you can trade with, let's say you remove the 250 stocks. Let's say you bought 500 stocks here. Then you bought the 250, you would have sold it here. Then you're riding with the 250 again. If at all it goes down, you would only lose what you invest. You would not lose your original capital. You regained it, but you would not make any more profit. So that is how you need to manage your portfolio, folks. Usually my system, I take off half of what I go at my double so that I never lose on it. So that from there I let it ride again. So that's what you should do with Palantir. So remove half at your double and then you go from there, leave the other half and let it ride and have your technical stops below the Ichimoku cloud. Hope that makes sense. The next reason which I wanted to talk about is, let's take another more volatile example, NVIDIA in the recent times. So NVIDIA, if you look at in the long term, it has been a very good stock. Let's say if you had bought it here somewhere, this is around December 12, 2022, it broke here and it went up. And remember, folks, NVIDIA had a split of 10:1. So if you had bought it here, around $15, folks, this is where around $17 and your risk was like not $17 here, folks. Here it is like around $25, right? And your risk is like around $18. That's a very good risk, $7 risk. Now you go from here, you have been riding this wave a long way, folks. NVIDIA today is $140 of high and still is above the trend. It never broke the Ichimoku, but it is going above and below. So that is how you play this, folks. So you could have made a big amount of money, and you could even some people had their retirement done in this kind of stock. So these are the kind of another thing which I want to talk about is SPY. When is the last time SPY went below the Ichimoku cloud? This is at March 2023, folks. It has never ever gone. So today we are at 2024. So if you had bought it here, around here after the Ichimoku cloud, here is the deal, which is at 409, folks. Today we are trading at 572. So this is what it is. So you have been making a lot of money on this, and it has been going up. So other way to trade this, if you are a little bit risk, you can buy leap stocks, leap options. Leap options are also a better way to trade, where you will get at least your price for 1/3 of the stock price. If you buy options with delta of 50, then you would do this. So definitely I like leap options. If I see this kind of a trend, I would definitely go with leap option. But one thing to be careful with leap options is you might lose the money if it starts going down. So you might want to be a little bit aggressive on your technical exits when you're reaching closer to your destination. But again, with the leap options, you can also do the same thing. Once it reaches 150% of your value, you can take away half of your positions and let the rest ride. And as you reach closer, you can also roll the options to the next year. So leap options are a great way to make money, folks. If you know what you're doing. I mean, I'm not anything about stock, but options gives you the leverage of trading. Okay, so that's one thing I wanted to mention. Even for Nvidia, you would have made tons of money on the in 2023 if you had done the leap options. Okay, so that is pretty much what I wanted to share with you folks. Before we get open, I also wanted to share one more option, which is a darling of the investing world, Apple. Apple, if you look at it, it is also a terrific stock, which has never gone below the Ichimoku right from 2023. Jan to second, it has been going up, and it broke the Ichimoku cloud on March 2023, and it has been going up. It has never broken it. It has been very volatile though, but still, if you had brought it here at 155, today you're sitting at 237. That is $87 move. So definitely a long-term play. Okay. So why I'm sharing these long-term things is investing is very simple, folks. Just that one thing you got to be, the mindset is you need to get very comfortable with the uncertainty. Just because you invested in a stock doesn't mean that it's going to take you. But if you follow the process, and if you follow the process to the T and execute, you will reach your financial trading goals, but you don't know which ones are going to take you to your financial goals. Oh, thanks for tuning in so far. Definitely, I would love to hear your comments on long-term investments using technical analysis. Definitely do check out our other videos on the different trading systems that can be used, and also how to build a crash-proof portfolio for your long term. I'll catch you in the next one.